commercial real estaters. It's week 33 in this journey of 2024. Quick hits announcements. We have our fund. If you need a real estate loan, we might do it. We might not. We might tell you where to go.
Yeah. Just send it.
Send it.
Especially bankers, if there's any of you listening, if you've got somebody who's in a weird spot.
Yeah, we could bridge them.
Yep.
You take us out.
Yep.
Boom, boom. Shake and bake.
Baby.
All right, couple listings just real quick. We closed last Friday on 3450 Bethlehem, 26,787 square feet on 3.4 acres of land. Zoned K heavy industrial in Fort Worth. Todd Hubbard and David Gwynn, little team up combo brokerage listing there, are working on it for us. So reach out to them if you got any prospects. We're fixing to start fixing it up. 1916 Old Denton Road. We will be closing here in the next week or so. 21,000 feet on 2.4 acres in Carrollton. Chris Kelly and Rich Young, reach out to them. 1230 South J. Elmer Turner Freeway, 11,000 feet on 10 acres gross. 7 acres of that is paved, called Bo Puckett and Caleb McCoy. We'll be bringing 4730 Bronze Way to market this week, 997.79 square feet on 1.06 acres. And it is leased through October of 28. Austin Marsh with Sands Investments Group is working on that for us. 1700 Parkside, Chase Miller and Jack Mercer. We have condo sales there. We'll sell off a 5,000-foot block. We'll lease a 5,000-foot block. For leasing inquiries, called Jack. For sale inquiries, called Chase. We have a building down in San Antonio, 15,494 square feet on 1.41 acres. On Dividend, called Dalton and Collin at Llano. We're rehabbing that thing right now. So, this week's economic calendar, initial jobless claims, forecast 235, previous 233K. And then we also have housing starts this week. The forecast is 135. The previous was 135. Well, our U.S. government decided to tighten that belt a little bit.
Ooh.
We only went into debt $19 billion last week.
Ooh, okay. Only 19 Billy.
Only 19 Billy. The Dow... pretty much. Oh, damn it. I didn't put my Dow in there. Hang on a second. Hold, please. Beep, 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 beep. Stock market was kind of crazy last week.
Yeah.
Let's see.
Treasuries are still kind of...
Treasuries went up a little bit, but
down,
the
though.
Dow closed at 39,497. So that was down 240 points from the previous week. S&P 53.44, that only changed 2 points. NASDAQ 16,745, that only changed 31 points on the week. West Texas crude up $2.87 a barrel to close out at $76.84 per barrel. The 5-year Treasury closed out at 3.8, and the 10-year closed out at 3.946. So those were both up 18 and 15 bips. Respectively.
Yeah.
SOFR went up a hair to 5.34. So, CRE stocks. All right, 1 week performance. Real estate diversified. REIT healthcare in second place. REIT residential in third. REIT retail in fourth. And office fifth. Industrial sixth. 1 month performance, REIT healthcare still leading the charge. REIT retail number 2, REIT residential third. And now it's time for the term of the week.
Oh, man.
Brought to you by Keenan Cook. I'm going to tell a funny Keenan Cook story real quick.
Do it.
So I had this client that wanted to buy a building in Hines, and he said, "Hey, this building would be perfect. Can you call the owner?" So I went to Keenan and said, "Do you know who this owner is?" He goes, "Yeah, it's this guy named Keeney Long." So we'd always say, "Keeney Long." And so then when we were closing Bethlehem last week, I looked down at the closing statement and it says Kenneth Long.
Yeah. You're chuckling over that.
I start giggling, and I'm in the middle of closing. I just take a picture of it and send it to him.
That's good.
It's like, how unbelievable is this? It wasn't the same guy, different guy. So, anyways, but the term of the week brought to you by Keenan Cook. Bring me a good deal, which means I'm not real.
Yeah. I want a 15 cap.
Yeah, so I'm sure a lot of brokers will relate to this. They'll call on some guy and he's like, "Oh, bring me a good deal. If you bring me a good deal, I'll buy it."
Yeah.
And it's like, which, you have to bring him the deal that you'd have to be an absolute idiot not to buy.
Yeah.
And do that for him.
And most of you are able to either buy your own deals, or you have guys that you can get in with and do it with them.
Or someone else you trust better to bring the deal to.
Yeah. Well, those are guys who are just like, "There's no deals out there right now." And you're like, sure, okay.
Well, they're not a real deal person anyways. They're a person that buys a building every 3 years or whatever.
If that.
If they've ever bought one. Yeah, I'd buy a piece of real estate if it was absolutely incredible.
Yeah.
All right. I'm excited to add this segment next week, but I just want to go ahead and cue people up for it. We will be starting college football picks next week because the weekend of the 24th is the first weekend of college football games. So
that's funny.
If anybody has any hot sports opinions, please send them on any locks of the week.
just bring it all in.
Yeah. So I was working out this morning, just listening to a little college football conference by conference summary.
Who do you think's going to win it this year?
Well, I guess Georgia's probably picked.
Mm-hmm. The question is, can Notre Dame remain independent with all the super conferences?
Yeah, I mean they seem to have held firm.
Yeah,
I don't think anyone else can go to independent though.
No.
I think that's Florida State's issue is they want out of the ACC after the debacle last year. And with that, like, who's going to take them? And anybody that takes them is going to tell them to come play them at their, we'll play you, but you got to come to, like, why risk going to Tallahassee to lose to an independent when you can, when you're in the Big Ten or the SEC already, and you're like, why do I need to take this risk? You can come to our place and play us, but
well, why don't they just dominate the ACC? Just year in and year out, just kick everyone's teeth in so hard that you cannot be denied.
Well, they did that last year and they got denied.
But they just did it for 1 year.
They got denied.
Do it for like 2-3 years.
But 1 year is all that matters. It doesn't matter every year. It doesn't matter if you won they won the ACC, and the reason they didn't get to go is because their quarterback was hurt.
Yeah.
So I mean, like, they couldn't. What could they have done?
I just think the SEC's the football there is the best.
It is. So well, everybody knows that,
and you can't really. It's hard to compete against that.
Yeah.
Your top 4 teams are arguably the top 4 teams in the SEC.
Yeah.
Like, what are we going to do about it? So now with UT and OU now in the mix too, it's even more challenging. Like, I don't know how the Big 12 survives.
Oh, the Big 12 will fire in a couple candidates every year. We'll have a spoiler that starts to make a Cinderella story and then just loses.
Yeah.
That's what will happen. Yeah. So, but anyways, I'm excited to get this segment back. Make our picks, see how we did.
Yeah. I'm just so not into college football anymore.
God, I don't know how you can't be.
It's
the most wonderful time of the year.
It is.
And dove season starts. And
I could care less about dove hunting. I don't like it.
You like duck hunting.
It's because there's an objective. We're on a pond.
What do you mean?
You have to get doves. We have to get ducks to fly into said pond. Right? But with dove, it's just kind of like you're sitting in a field. You're like, oh, let's hope and pray they fly on by. And then, bam.
Yeah.
So,
It's fun.
No, it is fun. It's fun. I mean, it also depends on who you're going with, but I've always had a good time. I just would prefer to go duck hunting. I also like getting up really early. And it's like
who doesn't love getting up like at 4 a.m. and it being like 25 degrees outside,
but it's part
sitting
of it.
outside and then shooting an animal that tastes terrible. You just throw it in the trash.
I don't know. Well, so why do you sit in a deer blind, for just hours on end?
I don't. I do it for my son.
Yeah.
I do it for the children, Will.
Yeah. That's part of it. But I don't know. I've lost the passion for college football. I think I'm just done.
We have to rejuvenate you.
Over exercised it.
We're going to have to rejuvenate you.
Yeah.
Okay. In news, syndicator lender ReadyCap sells problem loans for cents on the dollar. So Ready Capital, a key lender on the sinking syndicator ship, is selling distressed debt for cents on the dollar. This discount implies the properties where many multifamily investors are struggling to buoy are already far underwater. The New York-based lender reported it sold $20 million in loans so far this year, and another $415 million are in contract to trade in the third quarter. Executives detailed on a Thursday morning earnings call. The loans that cleared sold at 70 cents on the dollar, Chief Financial Officer Andrew Alborn said. It expects that total debt it wants to offload by year-ends, both in debt and contract, and other $130 million in the works will sell at 50 cents on the dollar. Yeah. Man, so the lenders are getting waxed in multifamily now too. So the multifamily properties are so underwater now that even the lenders are getting smoked.
Yeah, that's a problem.
That's a problem.
And Ready Capital did a lot of those groups like GVA. I think they're involved with S2.
Yeah.
And some I don't know if there's any issues there, but at least on Twitter, people are trying to pin Scott. There's other group called Tides Capital. That's like very much so, very active in dispositions and throwing the keys back. Ready was a big lender for a lot of those groups. Apparently.
So many Ready Capital borrowers tap the lender for short-term floating rate debt.
Yeah.
As their loans have come due, delinquencies have spiked. The protective rate caps expire when loans mature, and the cost of repayments has ballooned as interest rates have.
Yeah.
Some borrowers swept up by the boom also overpaid for assets. Whoops.
Can't do that.
A number have failed to finish their renovation plans, mashed together with factors in driving late payments and defaults across the niche asset closet. Ready cap.
You can't fix the basis, but everything else that you just mentioned sounds like an operator issue.
But all these guys look like really smart people, Will. Look. They look like Ivy Leagues.
Sure. Yeah, they do. I guess.
They'd probably laugh at us.
Yeah. Jeremy's got a Levi's
sweatshirt
hoodie on right now. And he's got gray jeans that he looks like he got from Five Below. I'm kidding. No, I don't know, man. I mean,
golly, that sucks though. Okay.
Well, the thing is like, it's like the cat got out of the bag and everybody realized who the lender was to do all those deals with. They just pounded them.
Right. Yeah, they all piled in on them.
Yo, these guys will like, if you're buying something 20% above what market is, like they'll give you money. So,
hey,
like,
if you're buying a terrible deal and you need floating rate debt to make it work, call these dudes.
Yeah. They'll finance you. They'll look the other way.
Yeah.
Like, when I read stuff from The Real Deal about them, I was just like, that's what that sounds like.
Yeah.
They suckered themselves. I mean, maybe that's what if really aggressive loan officers, really aggressive everything, like just trying to read. What's that other group that does all, not CBRE, that does all the leasing forecasts, but is it Green Street?
Yeah.
And it's like, I love them because they're optimistic, but like, man, you can't have 9% rent growth like year over year, right? So
real estate only goes up, Will.
Yeah, exactly.
Only goes up.
So who's leading the charge over there?
I don't know.
Floating rates for suckers, Jeremy. Remember that.
No, fixed.
Fixed rate debts for suckers.
Debts
Yes.
for suckers.
Yeah, I got that inverse.
Yeah. Okay. So touching on lately, it's kind of calmed down after a while, but the Twitter stuff. There's this guy. Did you see this New York developer, Brandon Miller?
No.
He committed suicide.
Oh, yeah. Okay. Yeah. Yeah.
So anyways.
Oh, they're coming for him right now. I feel like
they're suing his wife.
Yes. Yeah. Yeah.
And,
was it like Phoenix Capital or somebody like that? He's got a couple notes secured against his Hamptons house.
Yeah. So I think the big thing that I want to touch on here is, his wife's like this influencer, and it shows, she's showing their life hopping from an Upper East Side apartment that's $50K a month in the Hamptons home, through throwing parties, traveling to Europe, driving, all these fancy cars and all. When you document your lifestyle like that,
yeah,
you better be executing for your investors. Like, you better be executing at the highest level.
Yeah. And be bulletproof.
Yeah, you better be bulletproof.
You better, yeah, it's just.
So, stuff like that it's not a good look, man.
No.
Not a good look. And there was, some other supposed people that are in some similar situations posting stuff like that, and it's not a good look, man.
Regardless of what's going on.
Yeah.
Whether it's up or down, it's.
Yeah. So anyways, it sounds like they kind of made some bad buys and some bad COVID. I think he went spec office in COVID time. So,
not wise.
but anyways, they're suing his wife now. East West Bank foreclosed on one of his properties in 2022. I don't know. He's got a lot of stuff that's going to go down.
The terrible thing is, was she fully aware of what was the levers being pulled to?
Probably not. Probably not.
And now those issues are very complex.
Yeah.
And the people to get her out are very expensive. So
that's a tough deal, right? You lose your spouse, and then you have to deal with
$50 to $100 million worth of foreclosures on you and lawsuits.
It sucks is that, at some point you just got to humble yourself and be like, hey, we got to sell everything.
Yeah, that's kind of what happens. It's just
what were we talking about the other day? The apartment syndicators that are going underwater.
Yeah,
they should sell everything they own and move into their apartment complexes they own. They should have one unit at each complex that's having trouble, and they live there for a month, and then they go live at the next one for a month.
Yeah,
and they just live it till it's all fixed.
Yeah,
Yeah. At least you go down swinging, right?
Yeah.
But like if the boat is taking on so much water, and you're like, let me get on the helicopter real quick and go take vacation.
Let me go to Kentucky Derby and fly private.
Yeah, like if you're doing all those things, not a good look, man.
Not a good look.
Not a good look.
I think we have a little bit of an edge because you've lived in industrial buildings.
Mm-hmm.
You've operated out of industrial buildings, and you suffered in industrial buildings.
Yeah.
Right? Like, so I think, like we toured a building last week, and you're like, because of this area, both areas, we're not doing anything until I'm in the building. I need to see what's going on in here.
Yeah.
Because they're going to be vacant, and or we have to do some value add component. And you as a prior user of the space, you want to know, like, hey, what am I getting into?
Yeah.
Because I've lived their pains before.
Yeah.
So
I don't know, man. It's amazing to me that people can't just humble themselves.
Yeah.
I mean,
look, he giveth and he taketh.
That's right. That's right. And you can work your way out of anything.
Mm-hmm. Yeah. You can just make calls.
Yeah.
You make your calls. If you make your calls, you can work out of everything.
That's what me and my buddy Micah were going out to Jeff's ranch this weekend, and we were just talking, and he goes, man, sales cures everything. I go, that's what we always say. You
Yeah.
can just make enough cold calls. Hey, if you
Fixes
got
all
a
the
problem,
problems.
just go make cold calls.
Yeah.
And you can, because sales cures everything.
Everything.
You sell stuff, you sell a bunch of stuff, it cures everything.
It cures everything.
Sometimes it's just dealing with it is the
Yeah.
hard part. But it's like when I had that steel company, dude, I owed tons of people money. And I just
Yeah.
called them all up. It's like, I'm going to pay you. Just, you got to
Yeah.
work with me. And they
Yeah.
all worked with me and they all got paid every single dime.
Yeah. Yeah. It's just, if you're honest and you make calls, you're
Yeah.
fine.
Yep. And that's what we did. We went and secured so much business that it got us out of it.
Yeah.
And so,
Yeah. That's what Angie always says. I'm never worried about this place. Knock on wood. Never worry about this place because she's like, you and Jeremy will go on the corner and sell loose cigarettes to make ends meet. Like, yeah, that's kind of how this is. You got to get dirty sometimes.
Absolutely. Absolutely. One other thing I want to touch on, and I don't really completely understand it, and
I probably don't.
our intern really knew what it was, but
Oh, I know where you're going.
the carry trade. What is a carry trade? Yeah. D Styles was like, man, what do you think about the carry trade? I was like, I don't even know what you're talking about. I don't even look at the stock market. So, all right. So let's just read this from John Hancock Investment Management. What is a carry trade? A carry trade is an investment strategy that's most often associated with foreign currency trading. Let's see. Why? Blah, 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 blah. A carry trade is an investment strategy where an investor borrows money in a currency with a low interest rate and invests it into another currency that offers a higher interest rate. And the investor does so with the aim of profiting from the interest rate differential between the two currencies. The investors might also implement a carry trade by borrowing funds in a low interest rate currency and using those funds to invest in an asset with a higher expected return, such as equities or cryptocurrency. Effectively, a carry trade is a return that an investor generates for holding or carrying an asset such as a currency or commodity for a period of time. Although this type of strategy doesn't always rely on the appreciation of the asset, this can factor into the trader's risk. So let's see. Okay, popular foreign currency trades have often involved the yen due to the Bank of Japan's loose monetary policy over much of its recent history, including 8 years of negative interest rates. We need to go raise money in Japan.
Yeah.
Like if they're making
What
negative,
a money shot.
negative, we got you, dog. We got you.
We'll pay you a preferred return of 5%. 5%.
This monetary policy stance led to a weak yen, creating an opportunity for global investors to pair it with the U.S. dollar within a carry trade to extract returns. In practice, investors would borrow in Japanese yen, effectively paying 0% interest, and buy U.S. dollars, earning 5.5 at prevailing rates. Minus trading fees and applicable costs, they could also use their newly acquired U.S. dollars to fund investments with higher expected returns. What are the risks? The primary trading risks of this type of strategy include volatile currencies or change in interest rates quickly affect the carry trade's profitability. The risk is evident in the recent unwinding of the yen-US dollar carry trade, which has triggered a dramatic global sell-off in risk assets. In March 24, the Bank of Japan reversed its long-standing monetary policy stance and increased interest rates for the first time in 17 years, moving short-term interest rates out of negative territory. Then in late July, the central bank raised its key interest rate to 0.25%, surprising markets that had largely expected rates to remain unchanged. This shift in Japan's monetary policy, coupled with the weakening U.S. economic data, caused the yen to appreciate significantly in recent weeks. So it sounds like almost like a short squeeze.
Yeah.
You know?
Mm-hmm.
Let's see. In a carry trade, the potential gains from the interest rate differential can be eroded by the appreciation of the lower yielding currency. Well, that's what happened. It appears that many investors are now unwinding their carry trade positions as the yen appreciates while the interest rate spread narrows. Should the U.S. Federal Reserve begin easing in September, this would further narrow the interest rate differential. So everybody's got to sell off if they're anticipating a Fed drop in rates because their spread is just getting tighter and tighter. The noose is tightening around their neck from both ends.
It's coming.
It's like multifamily.
Yeah.
Insurance costs.
Taxes.
Floating rate debt. Yeah.
And rates are rental rates are coming down. They're getting soft.
Yeah.
There,
Yeah.
which is the kiss of death. That's the kiss of death
It
right
is.
there. I mean, we've passed on some stuff where properties were on gross leases, and everybody's, oh, you convert them to triple net. I'm like, ooh, can you? These people have all been on them for so long, and then can you take a 40 to 60% increase on top, and then they all leave? So not only do you have now you got vacancy, these people can't handle the rates. They don't understand what triple nets are, and you got $2 to $10 a foot sometimes going into the building.
I think these small bay deals, people are going to start being like, hey, dog, what do we say? I'm going to go work at Caliber Collision.
Yeah, I mean, think about it. You have a guy who's leasing 5,000 feet. He's got 6 employees, maybe, right? 4 to 6 employees. And he maybe makes $115,000 a year. And then you give him, a $4 rental rate increase, $5 rental rate. You jack it all up. I mean, you took $30,000 to $40,000 out of his pocket for all that risk.
Yeah.
Now he's making $65,000, $70,000.
Yeah.
And just go be the general manager of the Caliber location.
That's
and
right.
they probably make, so it's tough.
Yep.
It's tough. Hey, if you own small bay stuff, get your people on triple nets.
Yeah.
Save yourself. I know it's a whip. They don't understand it, but you need to do it for yourself.
Yeah, I agree. Well, that's all I got.
That's all I got. I don't have much more. I mean, there's some stuff in San Fran that's breaking right now, but what hasn't broken there? I guess they got a lot of bad hotel debt, but nothing really to report. Hotels have not done well since COVID.
Oh, Jerry Jones and CD Lamb going back and forth on Twitter this week.
Where are they?
Well, Jerry Jones said he's in no rush to.
You just don't want to pay the man, does he?
They don't want to pay him.
Why?
They won't pay him. I don't know. Probably because if he pays him and Dak, he's pretty much out of money for salary cap consideration. So, anyways, we'll talk Cowboys next week. They lost yesterday.
Did they?
To the Rams.
Oh.
Mm-hmm. It's preseason. Doesn't really matter.
Doesn't matter. Doesn't count.
It doesn't count.
Doesn't count.
So, all right. Well,
let's wrap it up.
We're out.
See ya.
See ya.